Hi, my name is Brenda. I am an accounting instructor here at CVTC. Today I'd like to talk to you a little bit about when you should consider firing your accountant. This makes me a little nervous because I am an accountant and this sounds bad for my profession, but occasionally some of you have an accountant who says something like, don't pay off your mortgage early, you need the tax deduction. So I just want to take a moment and explain exactly what is a tax deduction. All a tax deduction is it reduces taxable income. So here's an example. If your taxable income is $75,000, and let's keep it simple and say 15% tax rate, that's $11,250 of taxes. Now, if you got $1,000 deduction, that would reduce taxable income only $1,000, which means your tax would be $11,100. It saved you $150. That was my $1,000 deduction at my tax rate. That is all a deduction is. It reduces taxable income and you get a little bit less off. What this is really is you were willing to send someone $1,000 so that you didn't have to send the IRS $150. I don't know about you, but that's not a fair trade. Same thing when your accountant says you need to buy a truck for your business because you need the deduction. That's like being willing to give someone $30,000 or more so that you didn't have to send the IRS a whole heck of a lot less money. So when someone says you need the tax deduction, make sure you're actually doing it for a valid business reason and not just because you're trying to reduce taxes, because that's not a game you're ever going to win. If you want to learn more about the accounting program, head to our website, cvtc.edu. Thank you.